What we got here is Tony Sacconaghi from Bernstein on CNBC, and this is titled "Bernstein's Tony Sacconaghi." Pardon me if I'm pronouncing it a little bit off. On why he's underweight Tesla, and of course we know the headline here being that Tesla will be a great short for 2024 if you want to make some money. So the interesting preface here is that you don't really see firms like this come out and promote specifically a name to short like this unless there's like a Hindenburg report or whatever. It's a very balls on the line call, if I want to use that expression, because if you're wrong, it looks terrible. Now, first things first though, before we even get into his thesis on the Tesla short and why he thinks it's a great position to have, I think it's just fair if we look at tip ranks and we just pull up Tony's tip rank performance for Tesla and see how has he been. And I think I have a pro account for tip ranks. Yeah, I am signed in. Okay, hold on. So let's look at his Tesla performance here. One sec. Oh, there's a lot of ads here. Okay, so this is his Tesla. Maybe I'll adjust this a little bit here. So as you can see, hold on. Where's the graph? Pardon me. Okay, to the right here. Let's just do the last 5 years. First things first. Oh, hold on. Guys, hold on. We had this combo last week. Ad blocker. Sorry, tip ranks, but I thought I had a pro account so I can do whatever I really wanted. Okay, let's do the last 5 years. Last 5 years on Tesla, Tony has specifically been hold up until 2020. Remember what happened in 2020? Tesla started soaring. And then sell. So, despite everything that's gone on with Tesla in the last, let's just do all time. Tony has never ever been, let's do the last 3 years, never ever been a buy on Tesla. Tesla has soared, like 16 or 1,000%. Okay. It's been saying this for years. Yes. Agreed with the chat. Now let's see what he has to say about 2024. And by the way, if you're wondering about his tip ranks status, he's rated 1,286 out of 8,635 Wall Street analysts. Okay. His average return is about 10% and his success rate is about 57%. Safe to say though, a lot of people do really respect Tony on the street and what he has to say. So let's take a listen of why he thinks Tesla is a big fat dud moving into next year.
Guest this hour says that his best,
let me know if the audio is good.
Best idea for the new year is an underweight position in Tesla. He sees delivery and revenue estimates for 2024 and 2025 coming down materially, he says. And it's also a warning of growth, a narrative around the company that he believes could weigh on the multiple. Join us right now is Bernstein senior research analyst Tony Sacconaghi. We're also going to ask him, of course, about Apple hitting the $3 trillion market cap level again and regulatory and China risk for that company. But let's start with Tesla. You have been negative on Tesla, but now it sounds like you're more negative.
Good morning, Andrew. Look, I think the backdrop is important here, both the market and for Tesla. So the Magnificent Seven have had an incredible year, as everyone knows. And I think there will be scrutiny on these names as we begin next year and people level set and say, where do we go from here?
Now, remember, just in the last segment, I talked about the Magnificent Seven and how Tesla really is kind of different in that respect, where it's one of the only ones in that group of companies that is nowhere close to all-time highs. That's the key difference here moving forward. Now, you could say the market is correct in pricing in a lower EPS, but I think it's a point that I don't see a lot of people talking about. Yes, the Magnificent Seven, that Nvidia, Google, Apple, Microsoft, blah blah blah, Tesla have done well, but Tesla is one of the only ones that is nowhere close to all-time highs comparatively to the rest.
And we think Tesla's earnings are going to be flat next year. We think they're going to have to lower expectations around deliveries for next year. And the stock is trading at nearly 100 times our estimate for next year's earnings. And so if collectively the Magnificent Seven are going to, potentially pull back and investors are going to think about these stocks more critically, certainly Tesla is one of those companies where I do think that we could have underperformance. And as you mentioned, Tesla did very well this year. The stock almost doubled, despite the fact that earnings were essentially cut.
Sorry, Tony, it actually more than doubled. Thank you very much.
Cut in half. Analysts thought they do about $6 in earnings a year ago. They're going to end up doing under $3. And the stock was remarkably resilient because people believe, that growth is still intact. And I think 24 and 25 are going to be pretty tough years for Tesla. And so you do run the risk of losing this growth narrative. And it's really hard to sustain a multiple like that if people are doubting your growth.
Now, I will concede, of course, you got to be very thick-headed to not even admit that Tesla's EPS has been nowhere close to what it was projected for by, Tesla bulls, if you asked them a year or two ago. Of course, expectations for EPS have been cut massively. Now, the question isn't so much, okay, has it been cut? The question is, has it been cut systemically, fundamentally, or has it been pushed and smoothed out for this year and lumped into the future years ahead? Meaning, were there certain things that we're going to do this fiscal year that they didn't get to? Or was there fundamental challenges that they are not going to be able to solve and they're not going to ever be able to solve? That's the question. Because one of them pushes EPS into the future, and yes, you can discount that backwards. The other one says, no, Tesla's growth story is over. And now the biggest underlying feature here being FSD, right? FSD, Elon said end of the year. God knows who at this point when FSD 12 is going to come out to regular folks. And forget about robotaxi fleets. I don't think we have had any real updates on that. So as you guys know, I've never been sold on the timeline for it. I've always been kind of the laggard when it comes to talking about Tesla FSD timelines. Yeah, Tesla FSD in China will help. Sure. Maybe, but we need tangible robotaxi fleets out there and a plan to do that. Now, I will ask in the chat, FSD predictions on V12 and robotaxi fleets in the chat, please.
So that's
essentially
the case.
But let's just talk about the growth piece of it, because I understand the margin compression piece of it. But I'm curious sort of what you think about the growth piece of it and the idea, if you believe, and look, it's been a long time, you need the breakthrough to happen. If you believe the sort of self-driving car narrative, if you believe some of the tech narrative, does that change any of these dynamics?
Clearly, if Tesla was able to deliver and regulators were able to accept full self-driving, a year from now, that adds potentially $10,000 plus in profit per car.
Okay, I think it adds way more than that. If all of a sudden you have robotaxi fleets going out there, and remember the whole premise for Tesla of robotaxi is that, hey, all it takes is a software update, and then even I can run a robotaxi fleet should regulations let me pass. I think it adds way more than 10,000.
And that dramatically changes the economics. I think our belief is that it's difficult to know when full self-driving will kick in, but we think it's years and likely multiple years, not only from a technology perspective, but perhaps more importantly from a regulatory perspective. And then, I think more importantly, we think that over time, full self-driving will become democratized, that there are lots of really big companies investing lots of money in full self-driving. And so Tesla may very well get there first and may be able to command higher prices for a few years. But ultimately, like everything in the auto industry, competition drives down pricing. So that $10,000 per car, if Tesla's able to capture that 3-5 years from now, that could be $1,000 or $2,000 per car 5 years after that.
Okay. That is specifically where I am going to pointedly disagree here with Tony. So far, I've kind of conceded more or less that EPS could be flat, blah, blah, blah. Now, listen, that's where I think the Gary Blacks of the world, Wall Street analysts of the world really miss it. Look, I'm going to respectfully say here, the reason why no one will be able to compete with Tesla should they solve full self-driving when they solve full self-driving is that no one can make cars at the scale, and no one's made cars at the scale already that are going to be able to deploy these updates. And as Kathy Woods often says, robotaxis are kind of a winner takes all business. As soon as you're able to flood the market with them, the incentive to come in is not very high. Now, Ford, Tesla's talked about licensing FSD potentially, and that's been in the rumor mill for a while, and potentially that comes. But if you're Ford even, this is where analogies don't do you any good. Tony is, an auto analyst. He looks at everything in the auto industry as a commodity in the long haul. And I think It will. I mean, FSD probably will be a commodity in the long haul, but I think it'll be essentially owned like how oil is owned by OPEC, by Tesla. I mean, come on.
Let's pivot for a moment to Apple. We talked about it crossing the $3 trillion mark. What do you think the valuation of this company should be 12 months out from now?
Well, I think that's the big controversy around Apple, with both saying, look, this is a consumer stock, a great quality compounder.
We're not going to get into Apple too much, but I will say the only caveat, the only analysis I want to draw from Apple into Tesla is that if you just look at Apple's corporate governship, or I wanted to say structure, but I don't think that's the right word. And it's Sunday morning, so I'm having a hard time thinking. But the amount of buybacks that Apple does, the amount of course, dividends that Apple pays, I think is something that eventually Tesla will have to look into. Not the dividend portion as much, but the buybacks. Apple doesn't get to a $3 trillion market cap if they don't do buybacks. It doesn't get there. And sure, Tesla might not be in the position right now if they want to invest billions of billions into new factories and in the next year or two. But eventually Tesla will get to a point where they're going to start doing buybacks, and that's how they're going to be able to pass the market cap Saudi Aramco and was it Apple combined, right? So market makers love this guy. Yeah. So bottom line is CNBC with Tesla. It's funny because if you look at CNBC, even they often don't talk about Tesla, and they don't bring people on if it's bullish. I mean, they had Sawyer Mayer on recently talk about Cybertruck. But if you're willing to throw your neck out there to talk about Tesla short, they are more than glad to have you on. T. Nelly says massive dislike for Elon's political positions also contributing to Tesla not returning to near all-time highs like others in the Magnificent Seven. I would also throw into that, of course, you would have to, if you're being intellectually honest, say that Elon also selling stock with, in the open market to fund X during this time also didn't help. You can make an argument on how much of an effect that had, but if you talk about consumer confidence in a stock, I mean, it's hard to say that. But I mean, Elon is Elon. Elon's never been a very well-liked guy in terms of the establishment or the elite or the powers that be. It's just when you're as disruptive as Elon, when you talk about SpaceX, and there was that report of, China and the CCP really worrying about SpaceX getting too far ahead in the space race. When you talk about Tesla and disrupting the auto industry, you talk about Tesla and disrupting the energy industry. You talk about the Boring Company, it's early stages there. You talk about Neuralink or XAI and the overlords that be in the AI race. I mean, it's not like Elon has a lot of friends. I mean, everyone that he's pretty much going up against everyone. And in business, I mean, all is fair in love and war in business. So, yes. Oh, God, yes. Ed brings up a great point. Buybacks. GM trying to fake success using buybacks. There's a key difference here with what GM is doing. And if you don't know what GM is doing, GM is essentially raising money to buy back and give out dividends. They're essentially borrowing money against their best interest to be able to give that money back or buys back. It's an artificially way to inflate your stock. And it's actually, frankly, disgusting. Quite honestly. Martin, how's it going? Will FSD work or not? It all comes down to 12. Well, 12 is the big release, and who knows how far we are from there. The establishment do not care about the things that you want them to care about, or that they want you to care about. They're very happy to make lots of money. Oh man, we should do a political show here soon. Okay, another thing I'm going to do here, if you're watching on stream, if you're enjoying yourself, hit like, hit subscribe, of course, but also, if you are join the stream, if you are watching